this morning an extraordinary meeting of the Council's Audit, Risk and Finance Committee. I'm Peter Worthy. I'm the Deputy Chair of that committee, and I'll be chairing the meeting today in the absence of our independent chair. We have a full quorum of committee members. We have the Deputy Mayor Anna Curnow, Councillor David Wills, Councillor Jonathan Larson, Councillor Erin Wilson-Collins. I think that's the lot. And that is a full quorum, plus staff, of course, who are also be presenting during the course of the meeting. Also, a welcome to our representatives from our auditors, Deloitte, Bryce Henderson and Vera Chen. Good to see you both here as well. So I'll get the meeting underway formally with a karakia. Tēnā tātou katoa, nā mai haere mai ki tēnei kaupapa, ko te tamanako ki kiti, I te hua ka puta mai, no rira, tēnā koutou, tēnā koutou, tēnā koutou katoa. Right, apologies, we have none at this stage, so that's fine. Thank you very much. Right, excuse me, everyone. Oh, damn it. Sorry about that. That was another council staff member ringing. Right, moving on to confirmation of the agenda. We have a small agenda this morning because it is an extraordinary meeting and is focused on part 2 of the annual report, which is the financial component. So the confirmation of the agenda, could I have a mover for that, please? Thank you, Councillor Wills. Seconder, I saw Deputy Mayor raise a finger there before. All right, all those in favour of the agenda as it's been laid out by governments?
Aye.
Aye.
Carried, thank you. Conflict of interest declaration. Are there any conflicts relating to these particular items on the agenda that haven't already been registered? Nothing there. Right, we'll move on then into the open agenda. And item 2.1 is Deloitte's report on the 2021 annual report. I would just ask Mr. Bryce Henderson if he would like to present this paper. Thank you, Bryce.
Thanks, Peter. So,
certainly, before you go, could I just, to receive this report so we can discuss it, could I have a mover? Thank you, Deputy Mayor, and a seconder. Councillor Wilson-Collins, thank you. Sorry, Bryce, carry on.
That's right. Thank you. So I'll take the paper as read and just go through the salient points. So if you just go to the executive summary, essentially we're probably 95% there now. We've got a few little things on the financial statements just to tie up, but we don't envisage those would have any accounting number changes. And then that's the financial statements piece done. And the ongoing work really is just trying to finalise the statement of service performance type points and the front half of the annual report just to make sure it's consistent. So we have seen a number of drafts, and we're into, we've fed back our comments. So again, that is very, very close, but that's probably just the last piece to actually see what the final front and back half will look like, and make sure that's consistent with the financial statements. And then subject to that, we'll go to the council meeting and ready to sign, subject to subsequent events and nothing else happening in the next 2 weeks. So we're in a good frame at the moment. In terms of the key issues, by issues, these are the areas of focus, as we call them, being the ones which involve the most judgment or are most prone to error. That is probably best shown on page 7, which is it the slide deck, if you've not got it there. So management overrider controls, essentially that's just ensuring that through journal entry testing and management bias, accruals, estimates, there's a number of areas and then a set of accounts where management can influence the outcome. So there's a lot of work which auditors do in that space, making sure there isn't any bias. We actually do actual testing of journal entries throughout the year. And again, that's an area of judgment, so that's an area of focus for us. That work has been done and we didn't have anything of note for the committee. The second area is the revaluation of infrastructural assets. Clearly, this is I think to say it's a massive exercise would be an understatement. That is, for this council in particular, a large exercise. There's a large degree of assets for council, widespread throughout the district. And so there's a lot of revaluations which happen, which management control. And this year, as you'll know, it's been a marked improvement over the prior years. So in the prior year, we had issues around the revaluations in terms of reconciliations, etc., and the quality of data. There's been a significant improvement in that space to a point where we are able to sign the accounts, whereas last year, as you know, we had to delay to get further work done. So there are still some findings which we'll talk about soon, but overall, the position in the financial statements, as you see, we're consistently happy with. They reflect the underlying revaluations. And so again, we're in a position that the numbers in the accounts we believe are reasonable.
Yeah.
The state of compliance, the third area, that is just making sure the rates follow the required legislative acts. So again, in terms of that, we look at legal opinions and the sort of work that's been done. From our perspective, there are no issues noted, and the rates followed the requirements of the Act. Fourth area is development contributions and consent revenue. This is an area which historically we've had a number of adjustments. So there is a bit of judgment here. When you have, when you put in numbers for consent, it's quite judgmental as to when you recognise the revenue, because there's lots of pieces to a consent process. So that does involve management, in particular, doing work around each stage of the development of every consent. And then at certain consent stages, you recognise the revenue. So it's a revenue recognition question. Even though you might get, for example, $1,000 up front, you can't recognise that $1,000 on day one. You have to do a number of things before you can recognise that. So that tiered approach is where we spend a lot of our time. And again, it does take a lot of time, and management have done a good job this year. So we don't have any major findings for the committee. And the last area is somewhat systemic. It's sector-wide areas of focus. Obviously, being a council, there's a lot of things which are important to the community. So they include areas, conflict of interest, related party transactions, sensitive expenditure, etc. So there's a number of tests we do there. And again, overall, we're comfortable with where the council's landed. We have got some observations in that space. Predominantly around sensitive expenditure, we found a small number of exceptions, just things not being done as required, and that's been referred to, will be referred to in a management letter. So nothing of significant concern to us, but there's certainly points that we'll talk to in the management letter. Now, I suppose if I just pause there, the only other thing, just before I pause this, the Three Waters, clearly that was a big focus area for the LTP. And again, what we've done this year is just update the information from the LTP. So in terms of the accounts, it's really a disclosure item. But the Three Waters is occurring, and it's work in progress, and that's essentially in the front half of the accounts. But it's at this point in time, it's really a position of note. There's nothing really which a council have done to date which requires further disclosure. And unlike the LTP, where we actually did an emphasis of matter, and this, for a set of the annual accounts, we don't have to do that. So it's more something for the committees to be aware of when they read the commentary on the Three Waters, to make sure they believe it's factual and reflects the state of the council's activities. So before I'll pause there in terms of the focus areas, and then we can talk about some of the findings in a bit more detail. But those are the 5 areas which we spend most of our time on. Obviously, we look at lots of other things, and that's the results of those 5 focus areas. So maybe I'll take some questions, Peter.
Yeah, thank you, Bryce. Okay, well, before we get on to the actual focus areas, is there elected members got any questions for Bryce on so far? Yes, Deputy Mayor.
Just a very quick question. With the DCs, I understand that you say that it's there's an element of judgment in there. Is there an option to sort of systemize this or create a more defined process, or is it really just such an area of judgment that it's quite difficult to create that?
well, anything's able to be systemized, but the cost benefit is quite significant. So what you really need to do is a system where you have, let's say if it was even a consent might be a better example, where you might have 10 to 15 parts of a consent process from application all the way through to the issuance of a certificate. So the ability to track each of those systems is done. So when we do our testing, we can see whereabouts in the process it is. But to actually have a system where you could say, we've done 5 of the 10 things we're required to do, therefore we can recognize, for example, 50% of the revenue. That does take a lot of systemization and customization, which generally would be world class in some respects. So I think the answer is it's pretty hard. It's possible, but it's probably a bridge too far without an unlimited IT budget.
Right. Thank you.
Because I was going to say, I think Graham, correct me if I'm wrong, the current system actually requires the processing officer to write notes, and what the finance team actually does is, what really matters for us is the cutoff, like the status as at year end, those that have been open during the year or being processed in the year and not completed. And I believe what Graham's team does is go through those at year end and follow the notes through and actually document those. But I think what could be better, I guess like for now, is to make those notes really clear, so it's not so much of a guessing game from a finance team perspective.
Thank you, Vera. Any other questions from any other members of the committee? Okay, well, perhaps Bryce, you could carry on into the areas of focus that you've still got to cover.
Yeah. So whilst we're saying the work's appropriate and the accounts are appropriate, there's a number of observations through that testing and general testing. So it's probably just, this is on page 16 of our report for those that have got the agenda items up. So I think in terms of, there's a point there called quality of accounting records, and maybe the title's a little bit misleading, but I think what we're suggesting there is the council, like every organisation, accounting is becoming more and more complex, and so, and also given the fact that there's potentially people's churn, and there's a lot of information in people's heads, what we're really asking there, and is an appendix which goes into a little bit more detail, is we think for the key areas of judgment there should be quite distinct accounting papers, like a bit more like you might get in a corporate environment, where we talk about the issues being faced, the decisions made by management, and how they came to that conclusion, and that's the outcome. So I think we do that with management a lot of it verbally, and there are lots of pieces of paper and discussion, but again, what we're saying is going forward, it might be quite useful to have these sort of summarization papers. So for example, that information it's up to the decision of the executive, can be part of the audit committee papers. So for example, revaluations, it might be a discussion of revaluations, who the valuers were, what their views were. So just going down to that next level of deliberation and analysis besides the accounts. And that can in some cases be a 1 or 2 pager, or some cases it can be a 3 or 4 pager. It just provides the opportunity, if the council so wishes, to see the next level of detail. So our suggestion is that should be something which should be explored. The second area is a contractor tendering. Again, last year we did a lot more testing in this area, but just with the level of capex that is going to be in play this year and in the next 2 or 3 years, it's quite significant. So ensuring that you follow the appropriate processes, tendering process in particular, so there's no issue from a governance perspective, is quite important. And so there's a little bit of top-up testing which is still going on, but again, it's more a forward-looking thing than making sure you have those processes in place. And Jim in particular, historically, is very, very clear around when he puts jobs out, how it works, etc. So we haven't actually seen any areas where we can say it didn't work, but we just know from conversations that there's that real risk there, that given the huge volume of spend and during lockdown, etc., that there's potential opportunity where this may not happen. So it's really more a forewarning sort of conversational piece.
A fair comment. Yeah.
The statement of service performance, SSPs as we call them. Look, for a council or public entity, that's actually just as important to the community, if not more important, than financial statements. Financial statements are obviously very historical, whereas SSPs are actually what people live. So what we found is is again this year, but the SSP is often, the focus often is from a financial perspective. So the SSPs, we're just saying, need a little bit more work in terms of granularity. We tend to have more examples and more issues with SSP testing in terms of financial statements. We've found that again this year. So again, it's probably just needs to be a little bit more focus pushed towards that up front. I know this year, because of issues we had last year with evaluations in particular, where management focus on an area that has been addressed. So for example, again, we've focused a lot more on the financial statements this year, and that's gone very, very well. But the SSP measures in particular are still an area which we think could have a bit more focus or attention applied. And 2 more points, just the Mangawhai wastewater scheme. This is a reiteration of the points raised at the LTP and talked briefly about last week. Again, just the importance of all aspects of council, being infrastructure, being the development revenue teams, the finance teams, all talking to each other to make sure that they understand going forward how it all interrelates. So for example, if there's a budget overrun in a CapEx project, that does have consequences for development contributions going forward. So it's making sure you have that combined team looking at how it all interplays. And I think we've discussed that point last week, so I won't belabor that one. And really the last point is the evaluations. And so whilst management have done a great job this year getting to where they've been, there's still these legacy issues, which every year they are better, but they're still there. And they'll be there for a number of years to come. So I think it's one of those ones you say it's work in progress. But look, it's like most councils, your information is only as good as what you've got. So what a lot of the valuers are talking about is the data integrity sometimes is quite hard to find. You've got assets which are multi-years, have been there for 10, 20, 30, 40 years. So trying to understand, for example, what size pipe you might have under a road, it's really, really hard. So, 40 years ago, or even 30 years ago, you think about what record keeping was like compared to today in your own environment, and it's changed so markedly. So every year we do tend to have a lot of data integrity issues, not massive, but where the values will come along saying we've changed this pipe size, or the pipes we thought were this type and they're a different type, or the length's changed, and a number of what we call found assets, where they've just done more work and they've found new assets. Again, it's not unusual. It's quite common in the council environment. And I think there's probably 2 takeaways from that. The first thing is the fact they're doing this inherently means that the data is being better, right? Because you actually have got more time and spending more resource, make it integrity better. So that's positive. So year on year, it is definitely getting better. And this point is just sort of saying, look, it is unfortunately a function of legacy record keeping. It's not so material that would impact our opinion, but it's something which management and the valuers should be aware of. And so again, we're just raising it to the council's attention. And again, it's not different to last year's. It certainly has improved from last year, but it's not too different. And going forward, it's not something you can just fix. It's a lot of this stuff is underground. So the only way you can fix it is to do, a lot of underground testing, pipe surveying, cameras, etc. So it is a journey, and I just ask the council to note that and ensure that going forward that the quality does improve each year, and I think to date we've certainly seen improvement. So again, I'll pause there, Peter, the rest of it, and then just take any comments on that piece.
Okay, thank you, Bryce. Okay, has anyone got any queries on the information just discussed with? Yes, Councillor Wells.
Yeah, thanks, Chair. This is regarding internal control findings, contractor tendering.
Yes.
In your recommendations, you say we understand that the introduction of internal audit function is occurring and this area will be prioritised. Then you mentioned that the GM infrastructure, I prefer not to personalise it with the name, is the person conducting that or creating that audit. Would it not normally be that an internal audit would be created by a department other than the one that was to be audited?
No, so I'll just clarify. What I was saying there was the infrastructure person has a lot of contracts going on. So in terms of the processes around those contracts, that's part of that role. The actual internal audit and checking of that role is not that function. So just to clarify, I'm sort of saying that given the large amount of spend, it's important you have the processes in place that the people who actually allocate out the jobs are following those processes. This is a separate point. We're saying, you know, we understand there is an internal auditor going to be appointed, and tendering and procurement will be part of their brief when they get appointed. So it's actually, sorry, it's just a clarification. That's a different point.
It's because I was raising the issue only because of the recent deployment in that area and the reallocation of roles amongst the management structure, that where it was previously much more separated between the different roles, there's a bit of an amalgam of them currently, and how that would impact on this recommendation. That's why I raised this issue here. Because I'd rather have Deloitte's comments at this stage in the process than a criticism of them afterwards.
Yep, a fair point. Maybe we're aware of a change. Maybe on a secret, we're aware of a change happening, but at this point we haven't seen the change. So maybe that's something we need to pick up on, and when the change occurs, we could probably have a chat to or see internally whether there's actually any segregation of duty issues, which might be useful to the committee to know about. But I think as long as the processes are in place, allow the appropriate processes to be done, the fact that you might have an amalgamation of roles at a GM level shouldn't necessarily be an issue. It really goes back to the processes underneath that to ensure that processes are followed through. So I hear your point. Sue, for example, will be taking on a lot more of a role. That in itself isn't necessarily a concern, but there is an issue underneath that. So we'll take that on board and make sure that we don't see any lessening of controls.
That was not a personal comment. It was more a comment on the protection and the avoidance of conflict of interest, for want of a better word. And I just thought that I would rather have Deloitte's guidance at this stage, if it's required, than, like I said, a tag on next year's accounts to say it wasn't to their satisfaction. Thanks for the time.
Yep, fair point.
Thank you. Deputy Mayor, you've got your hand raised.
Yes, thank you, Chair. If I could ask a question about the Mangawhai Community Wastewater Scheme, and I'm just looking at your recommendation and management's response and wondering if they're the same things. You're recommending that a subgroup meets to look at the programs, and I'm assuming around the wastewater scheme, and the management response is that there is a subgroup that meets to look at infrastructure. Is that enough? Yeah, that there's a general infrastructure planning group, or does there need to be something that is specific to Mangawhai wastewater, or is what management's response suggests is that specific to Mangawhai wastewater? Just wondering if we're close enough to what we need to be to monitor that.
Yeah, I think this is still work in progress. Maybe Sue can add. I think we've certainly seen the last month, 2 months, more interaction between the various groups through the minutes and talking about that. What we're suggesting is probably a little bit more in terms of, as I say, if the infrastructure spend $5 million more on a balancing tank, or making it $1 million more, then you've got to save that money somewhere else. Otherwise, your DCs have to be increased somehow, or you have to cut the money back. So it's important that all parts of council involved in the area understand the impact that each other makes. So I think the finding round, which is raised here, was really the council coming together and having those conversations to understand what each one's doing. And the natural extension of that would be, in terms of modelling and making sure, for example, if a capex goes over, how are you going to recoup that through DCs? Because it doesn't happen naturally. You actually have to do a positive. Are you going to change the annual plan to ensure that the developers are paying for it, or do you do something differently? So maybe Sue, if you could probably elaborate on the comment to make sure we're talking the same thing.
Yeah, so through the chair, there's meetings that we have on a monthly basis with the developers, Mangawhai Central, because of the fact that it's a huge program of work there that they're undertaking that's going to have an impact on all of our staff. And we've been doing that for the last year so that we understand what they're planning, and we can understand the impacts on our assets. So that's basically in track, has been for the last year. We have had one meeting probably about 2 weeks ago, where we brought together infrastructure planning, finance, to look at the overall program for the Mangawhai wastewater system going forward. And that's only just been brought together. We have a new infrastructure planning manager starting on Monday. So that will be the key focus for him going forward. So we'll have a much better handle because he's been involved with it on the other side from Opus WSP. So that will give us, I think, we'll be able to focus a lot more on the plant itself and what it actually means for us going forward, and we will hold more regular meetings and then update council.
Great.
Thank you, Sue.
If I could just ask Sue just a quick follow-up call, how do you intend to update council? Is that through the CE's report or a separate report? What's your intention there?
Well, we haven't formed that yet, but likely to be the program of works, because I think that's talking about the whole program rather than one particular part of the program. So, and so I think that's probably what we were doing. As I say, we've only had one initial meeting. We've asked WSP to go away and come back to us. So we're hoping for something fairly soon so we can come back to you with some responses on that.
Yeah.
Okay, thank you.
Thank you. Just a quick question from me. Just looking at the revaluation of infrastructure assets, one of your recommendations, Bryce, was to look at reconciliations of these, preferably on a monthly basis. Now, it might be an answer, it might be a question for Sue rather than for you, Bryce. But what is council staff doing on that to that recommendation, Sue? Are we doing more monthly reconciliations to try and continue making this progress that we've seen in the last 12 months on getting on top of our asset revaluations?
Yes, I'll let them answer that.
Yeah, through the chair, yes, we are. So in the last few months, we've implemented sort of a new reconciliation process across all balance sheet items. So that's been underway for 3 or 4 months now. And fixed assets, now that we've got to the point where we did with the annual report and have closed out the end of the year, we're just going to carry that on and incorporate what we've been doing for the annual report process into our monthly reconciliations for the fixed assets. So it's more around, rather than the revaluation component, it's more around tracking the work in progress as we're going along. So it's the CapEx spend month on month and just updating the register on that basis as we go forward. So yes, that will happen. It's happening now.
Oh, very good. That's good progress. Thank you. You've still got your hand up, Deputy Mayor. Is that another question or no? Any other questions from any other of the committee? Right, Bryce, back to you. Is there other aspects you want to discuss on this?
I'll try, and the rest of it's a little bit easier. So section 2D or page 19, I'm getting old. But those are a list of the potential adjustments or areas where we think there are still unadjusted differences within the financial statements. That totals to $393,000. And there you get a sense of where we're seeing differences. So some small ones in contribution income, some depreciation, some legacy issues around the Mangawhai Historical Society, under and over accruals in various areas. So overall, nothing of any size compared to last year's. Last year's one is on the next page. If you go to the next page, you'll see last year's numbers. It's a bit of an auditor thing, but if you have an error in one year, it does actually roll over to the next year. So because the assumption is that you fixed it this year, but when you fixed an error this year, it should have been fixed last year. So it's an auditor thing. So look at last year's. Last year's numbers were a little bit different. We had some similar ones, but we had GST ones, we had debtors and creditors ones, and we had vested income ones. So the quality of the accounts has certainly improved in our view this year, but we still have, given the size of the council, adjustments. So, and to summarise, we've got approximately 400,000 or 393,000 of errors this year, and last year we had 792 or 800. So directionally, it shows you that we are getting down to a situation where there's improvement. And those numbers, from our perspective, are material, but of course it's up to the committee's view as to what's material. But at that level, we would not be asking for you to adjust. The next one's really in terms of the accounts. We don't believe there's anything material in the accounts that's missing, so that's very, very positive. That's what we call summary of omitted disclosures. That's clean. And then after that, to be honest, it's really just items which are critically important, but they're items which are required by statute. So we tell you what our fees are. We tell you whether we've found any fraud and error. Do we have any issues around restrictions? Do we have any issues around related parties we believe you should be aware of? We've got none of those. There's a section on page 29, which is on difficulties. Again, I think lockdown, to be fair, we talked about this briefly last week. Lockdowns made it probably 30%, 25 to 30% harder in terms of just everything's over the phone, over Zoom. As we all know, it's not as easy as being in person. Unfortunately, lockdown is Auckland and your team is Auckland based. So while your team may be enjoying the luxury of walking around, we're still at home in our bedrooms. So that does mean it's been a bit harder, but we're used to it now. But it is a bit trickier. And there was a little bit of illness and just fatigue, I think, in the teams, which is perfectly understandable. And again, I wouldn't want the committee to think it was peculiar to Kaipara. I think everyone's tired now and fatigued, and so general inefficiency does tend to creep into any position. So that illness in this case did impact Graham's team quite a lot. It's a very small team, but Graham, and as I said yesterday or last week, sorry, Sue and Graham's team have done a great job to get to where they are. So had to carry the load, and a lot of people worked a lot of hours. So again, overall, we're very comfortable with that. And yeah, I suppose, Peter, the only closing comment would be there's a little piece at the back around future accounting disclosures and stuff, which probably is not really hugely important. Happy to take questions on it. The only one which might be interest to the committee, because it actually impacts a lot of organisations and they may have this interest on other issues, other jobs they are involved in, is what we call SaaS, or software as a service. So that's been I'd say a thorn in the side of accountants since May. And essentially what's happened is the accounting body came out end of April for them, but May for us, and they pretty much said that what we normally used to capitalise in terms of software is no longer required, or they don't believe it's appropriate. So a lot of organisations are going through a process. Some have done it already, where they've looked at what their software programs are and are analysing that. So in the case of Kaipara, there's approximately $200,000 of costs, which we feel are probably not meeting the new definition. They haven't been adjusted for. They'll be adjusted for next year, or else just wind it through, because the way software is depreciated quite quickly. So over time, it'll just naturally disappear. So that's the only other point I think of note, because it's on the error schedule, and you might see that word SaaS on your other non-Kaipara issues. So otherwise, I'll that's it from my side, Peter.
Thank you very much, Bryce. Well, has anyone got any questions of those last comments that Bryce made? Deputy Mayor.
Sorry, I'm going to be the one that brings up the size of the fees. They look, from what I'm seeing here, it looks like there's quite a jump. Can you talk to where that jumps? So last year 157, this year 195. Is that, am I reading that right? Yeah.
Yep. So they have jumped a lot. I think that's a function of lockdowns, essentially. So if you remember last year, we had all the issues around the evaluations. So it was quite a large piece. So even though often there's a lag between the fees being, so when we have an issue, we have to get OAG approval. So what tends to happen sometimes is a lot of the overruns this year, or costs this year, actually, even though they're this year's fees, they actually relate to the prior year. So there's a lot of legacy issues in terms of that number from the infrastructure points. A lot of legacy issues around COVID. COVID, by its instinct, does actually increase audit fees everywhere, because there's just more work to be done. Similarly on the LTP, COVID, there's been a lot more extra work done in terms of that, with Wakakatahi, for example, Mangawhai wastewater, etc. So I think, to be honest, you should be seeing all your audit fees will be increasing quite substantially over time. And I think this year in particular, the difficulties that have arisen through the illness and through the lockdown. And also it does take probably 2 years to get clean. So if you have an issue in 1 year, that does mean more work the following year to fix it. So just like anything in life. So yep, the fees have I think the LTP certainly makes it look bigger for year on year. It's not too bad, but you're right, the fees have increased. There's a lot to do. There's a lot of areas of the council which we have worked on with management and I think have improved a lot, but there's still lots of improvements. So for example, this year with the SSPs, still lots of areas there which could be better, and that takes time.
Sorry, can I just wanted to add one thing. Because the last maybe sometime last year as part of our planning, we submitted a proposal which we put it to the OAG, and I believe Sue, I think you presented that as well. So as part of the proposal, it does note the number of hours and what the rate would be per hour. What the OAG does with that is they actually benchmark that against the rest of the district councils to make sure that we're actually fairly charging. So that's actually gone through. So that fee 195 was agreed with the OAG and benchmark against the other sort of district councils. But I think if you do want more information, that proposal will give you a good insight into the number of hours that we said they were going to spend on the audit.
Okay, and so does that mean that in future years we're going to see a continuing increase, or is it going to plateau, or have we overcome a lump of additional work? Where do we sit in this?
So through the chair, I would see that next year that the audit fees should come down because there won't, as long as there's no further problems. We obviously have to make some improvements throughout the whole organisation in collecting the data for the SSPs, the statements of service performance. But Graham's has been resolving a lot of the issues in the financial area because we needed more people in the team. And he's got really good records, done a lot of work beforehand, been really proactive, so that when the auditors come in, it's a lot easier for them to do the job. So we would expect that next year the audit fees would reduce.
Yeah, I think a good measure of it's probably going to be, I think directionally Sue's right. I think the only thing to think about, and who knows what it will be in a year's time, is that there's a massive shortage of auditors in New Zealand. So, our cost base is increasing 10% year on year. So essentially we get auditors in from offshore. Borders are closed, so we can't do that. So I think it's well known from the auditor and ICANN's. We tried to get them in as emergency workers and the government said no to that as well. So probably don't believe it, but it is actually a specialist service. So there is a massive shortage of auditors. So year on year, we're going to the OAG and asking for 10% increases just on wages alone. So I think the key driver for that, in terms of Kaipara, is the hours is what we have to get down. So if we're sitting there going, because the hours are a reflection of effort. So if we're sitting there, and Sue's right, who knows what the costs may be in a year's time, but the hours are certainly our driver. And as I say, those plans we referred to, we go through on an hourly basis by level, and they are benchmarked to other councils. So that is, I think, driver number one, is we should be seeing the hours of effort reducing, because that demonstrates that the management team of Kaipara are doing the right thing. So that's the first one, the first, I suppose, trigger point to see if things are getting better or worse.
Thank you, Bryce.
Thank you.
Thank you. You can take your hand down now. Thank you, Deputy Mayor. Any other questions from any other committee members? All right, well, I'll move on to statements. Councillor Wills, you moved this paper. Have you a statement on the Deloitte report?
No.
Well, that was short and sharp. Councillor Wilson-Collins.
Thank you, Mr. Chair. Just a thank you to the auditors for preparing the report. It is a lot of work, and I know it takes a lot of effort. My day job is in a law firm, so I know audits and I know what it's like to be audited. I actually think they're great. I hope Sue is of the same opinion, that it actually gives you a chance for someone else to check in and you can improve your processes. So I have the view that if an auditor doesn't find anything, they haven't done their job properly. So I actually see this report as quite positive. There are some little rooms for improvement, but there is nothing there that is of great concern. So just appreciation. Thanks for getting that to us.
Thank you. Yes, I'd like to make a statement too. I think, generally speaking, I think this report has been a significant improvement over last year's report, and a lot of that's effort's got to go not just to the auditors, but also to Sue and Graham and the staff who have put a lot of extra time in. And I think the work that's been put into particularly our asset register and the reevaluation of all the assets that we're getting, it's very, very timely. We're going into a period where, in fact, we've got all of these externally funded projects that have been brought into the council mix, which is over and above our business as usual. And just thankfully, we're making the progress that's necessary in the financial systems to accurately record those assets as they're finalised and finished in the project side of it and brought onto council's books. So I shudder to think where we would have been if our level of asset valuation had not improved over where it was last year with all this extra work that's coming on stream. So I think it's been very timely at those improvements, and that's why I think it's so important that Graham keeps up with the reevaluation on a timely basis as we go through the year. Procurement processes are again, and Councillor Wills has raised that. I think that is also an area that needs to have staff keeping a very close eye on, particularly with the huge increase in value that we're seeing over this next 12 to 18 month period. So any process improvements that we've put in place will certainly aid us when we do our annual report audit for next year. So I guess from my point of view, it's been a very good report. I agree with what Councillor Wilson-Collins said. There have been items that have been highlighted and recommendations made to staff to continue this improvement. But if we weren't getting those, well, then you'd have to say, was the audit of the intensity and depth that we required? And I'm pleased to see that we've got that. So from my perspective, thank you to the auditors. Thank you, Bryce and Vera, for your work in this area, but also more importantly, I'm very, very pleased to see the improvement that Sue and Graham and the staff have been able to achieve in this last 12 months, even though we've still had the difficulty of COVID overlaid on trying to get all these accounts finished and audited. So well done, everyone. I think it's been a good process, and hopefully we'll be able to even grow that further in the next 12 months, so that when we look at these accounts in 12 months' time, we'll have a even more streamlined process. Thank you. Anyone else would like to make a comment or statement? Yes, Mr. Mayor. And thank you for joining us. I noticed you popped up on our screen just a short time ago.
Yes, morena koutou. I'd like to pick up on the themes that are being made here in these statements, and congratulate the team for having been able to put this work together and an audit report that is, if you like, not highlighting anything major or significant, but still has headroom for improvement. There will always be spaces for improvement. But the fact that there are no significant material issues is of importance to me. I'd also just like to really commend the team for having completed this work, if you like, in time for what we will call the original statutory deadlines of the 30th of September, rather than what government has allowed, which is for annual reports to be extended out to December, for the reasons of as Bryce was alluding to in his earlier comments, what's been happening with the COVID and with the shortage of auditors and the significant additional workloads inside council teams. So we're aware of that extension that has been granted, and I just go top marks to Kaipara District Council for coming through 3 months early with a report that's as good and as clean a bill of health as all of this. So congratulations to everyone. Kia ora.
Thank you. Statements from any other people on the committee? No final statement from you, Councillor Wills, as the mover?
Great. Now, thank you, Mr. Chair. Now you put me in a position that I have to, obviously, I do sincerely appreciate the work done by the staff. I just was helping the process along to finish the meeting, but no, I did. And the comments I made before were no reflection on any individual staff management. It was just a concern that we use the benefit of our auditor to put in place the ambulance at the top of the hill rather than at the bottom of the hill, and to use their skills in helping us improve even next year's. No, there's without getting into personal comment, which I shouldn't, but there has been, it's obvious that, sorry, I'll start again. As a councillor, we have traditionally, or I have traditionally relied on Sue's efforts in her role to contain the more largesse expectations of the infrastructure team. And that was why I raised that, is that we've depended on her ability to manage their budgetary efforts. So I was only concerned that when there's a blurring of the roles, it's hard to be the policeman and the other side of the fence. And also, I would like to comment, and this is personal, is the noticeable impact on Sue's ability to perform her job since the employment of Graham in his role. And that's to be a compliment to the manager, that you put together a complementary team that allows you to deliver across the board.
Thank you.
Yep, no, good comments, Councillor Wills. Thank you very much. Well, if that's the all the statements everyone wants to make, I'll then put this to the vote, that we receive and note the Deloitte's report for the 2021 annual report. All those in favour, raise your hand. Aye.
Aye.
Carried. Thank you. We can now move on to item 2.2, which is the...
Mr. Chair, excuse me. Matter of process. It says in the minutes here that it was moved by Deputy Mayor Curnow, but you've...
I'm sorry, I thought it was moved by... I was looking in the chat room to see whether we had that, but it hadn't been recorded. Sorry, my mistake. It was Deputy Mayor. I thought it was Councillor Wills. Wasn't it you, Councillor Wills?
I'll take credit.
Okay, no, I'm sorry. That's my mistake. We have been on the last meeting recording the movers and seconders in the chat room, and I went on to that, but it was not available.
Sorry, so just for clarity, so it was the Deputy Mayor who moved this?
Right.
Sorry, I wasn't in the meeting at the time.
Well, Deputy Mayor, my apologies. If you were the mover, I'm sorry, I didn't ask you for a statement as an opening statement.
That's absolutely fine. I would have only echoed the sentiments expressed by my colleagues.
Good, thank you. Just for a process, just to make sure this doesn't happen again, it's not a bad idea to governance. Gavin, if you could just put in the chat room, just movers and seconders on each of the motions. That's what we were doing yesterday, and I thought it worked really well. Thank you. Item 2.2, the annual report. Now, this is a recommendation to adopt. The actual paper we have in front of us is the annual report part 2, the financials, which are the paper that Graham will be presenting. So could I have a mover for, in fact, I'll move this recommendation. If I could have a seconder, please. Thank you, Councillor Wilson-Collins. Right, on the table, Graham, over to you to present your paper, please.
Graham's on mute.
My apologies. Thank you, Mr. Chairman. Essentially, it's the same report that went to the committee last week, other than a couple of changes that we made as we were finalising the fixed assets and the asset revaluation work. So in the statement of comprehensive revenue and expenses, there's 2 lines in there that we altered. And one was to do with vested assets, where we'd reflected some assets last year that we just needed to correct in the numbers that we'd presented last week. That was a $1.3 million adjustment. And then the other one was in the gain and loss on revaluations, where the final number was reduced by 1.3. And then that had obviously a $2.6 million impact on the fixed assets in the balance sheet, which is on 2 pages down. So other than that, the numbers are pretty much the same as what you saw last week. We have gone through and finessed a lot of the words and the commentaries, and just tidied up any sort of small errors that we'd found and those sorts of things. So yeah, I guess that's really all I wanted to say at the moment, but happy to take any questions on any part of the report.
Thank you, Graham. I've got a question to lead off with, and I guess this is going into the actual annual report as such. On the opening financial page of the Statement of Comprehensive Revenue and Expense, and this is the old hardy annual that we've talked about a lot in the last 12 months, where we have subsidies and grants, which shows a huge increase, and this is, as we all know, associated with external projects, external funding that's coming in. And I still have concerns, I guess, about the confusion this could bring in years to come when people look back and review where the council's gone from, this last year. Is it possible that we could have broken that subsidies and grants to our normal business as usual ones, and then subsidies and grants that have been from external sources, which are these project related grants, so that we can still have a line that is actually more meaningful from a business as usual point of view and clearly identifies where the one-off external funding grants have come from, because that has blown out, as you can see in that table, both the revenue line of subsidies and grants and the activity costs and the expenses. And I'm just a bit concerned that although there's an attempt to explain that in the notes, it would be a lot clearer if it was also differentiated in the table of accounts. Sue or Graham, would you like to comment on those?
We could look at that. I could talk with the auditors. The other option, rather than put it onto this statement, is to just add a line into note 2C, which is what we referenced to anyway. At the moment, we just give the same number, but I can chat with the auditors after this and see if they're comfortable for us to separate that out into two lines in the note rather than the actual statement.
Yeah, because I think our preference as well, probably not in the face of the income statement, but in note 2C, where you can show the big increase, you could explain that or put it as a supplementary disclosure.
Yeah, Peter, in the face sort of follows the LTP and the annual plan, and so it's sort of quite hard to put in a change that. Whereas in the note, we've certainly got the ability to give as much detail as you see fit. So as Graham's referred to, the note doesn't actually add a lot; it just says the same thing as the face. So we could easily break down that subsidies and grant number, and obviously change the comparatives as well into a bit more detail, which maybe Graham and Sue could think about.
I think if we could just think about that. I'm just concerned about any confusion that it could bring when it's all rolled into one number as it is at present. And one other thing, in your notes column in that same table, you've got references to note 2A, 2C, etc., etc. Now, you put at the bottom of the table that the accompanying notes form part of the financial statements, pages 12 to 56. I just wonder whether it would be also helpful for people who are not as familiar as to council's operations as we all are, to have beside that note, just in brackets, a page number where people could go immediately to the page. Because I know when I went through and wanted to check on those notes, I had to then try and work out somewhere in 12 to 56 where we were referring. So that's just another comment you could have a consideration of, and perhaps if it's able to be done, it would just add to some clarity.
Okay, we can look at that. I'll work with the comms team as they put the whole document together to make sure that everything flows through correctly, because all of this needs to be fed into the rest of the report that they're compiling at the moment. So the final version that goes out to the public will be finessed slightly differently. Obviously the content won't change, but I can talk to them. Yep.
And one last question from me, and if we go down to page 32 in the accounts, and this is again on public debt, I noticed that last year we split the public debt. We split the public debt between with a current and a non-current portion. This year we've only got a non-current portion. Now I'm sort of guessing here, but was that associated with the fact that we've refinanced our debt? Is that what it was?
Correct, yes. So there was a current portion last year. We don't have a current portion this year. The next one's not due for refinancing, I think, for a bit.
Now, correct me if I'm wrong.
Yeah.
I may have missed it, but is that explanation put in the accounts there at all? Because otherwise, it's going to raise questions in people's minds.
You can see it in the face of the balance sheet where it's the current portion's gone to zero. I don't have any words around that, but we could add a comment in if that's.
I think it would be wise to have a note or a comment there just to explain why. Otherwise, I'm sure that someone will raise that issue as why is it suddenly dropped to zero this year. Yeah. Okay, that's all from me. Other questions, Councillor Kerno?
Just a very small one on page 60 of the agenda. I'll just tell you which page of the report that was. Page 21 of the report. The table 2B, income and expenditure summary, the disclosures around the number of rating units. Are those years right? I'm just being a pedant here, but are those years right at the top?
Yes, they are, because it's referring to the numbers that were used for the striking of the revenue for the year. So they're a year behind. Yeah.
Okay, that explains that. Yeah.
Mm-hmm.
Well, thank you. That's all I had.
Right. Questions from any other committee members? My golly. Councillor Wells.
Yeah, this is just to help me understand the accounts, please. In the comment with regard to rates revenue, it's green if it's less than the there's a phrase there, quantified limit each year, and also the quantified under the quantified limit increase each year. And I've sought more clarification on what the quantified limit means. And also so that's my first question, just for my understanding. I assume it's to do with our long-term plan. It's a comparison against our long-term plan expectations.
Yes, that's correct. So the quantified limits in the financial strategy and the long-term plan. So that's set by council. So that's what we're reporting back against. Okay.
So just help me again. Thank you for that. It shows that it's a green or it's a good thing if our rates are actually coming at a lesser value than that quantified limit. But how does that allow for, let's say, a significant? If we have a significant increase in our rateable properties, it actually shows as a negative for us in our financial management.
You're referring to the orange bars in those charts, are you?
Yes. Yes.
Yeah, it just means that in terms of the way the calculation was done, we've actually gone over the quantified limit. So we set a limit of 4.8% increase, and when the actual final revenue came through, or whatever, or if it was rates, might have come in slightly more than that. So therefore, we didn't meet our quantified limit. You'll recall when we did the long-term plan, the first 3 years of, I think, the first 3 or 4 years, we actually had orange bars as well for the next year's long-term plan. But over the whole life of the long-term plan, the overall increase was under our limit, which would increase to 5%. So this is reporting back against the old LTP, which was sitting at 4.8, I think it was.
So that means that 1% approximately that's agreed to as our expected growth underlying when we take into account our rates increases is quite important, and to us meeting that particular measure.
Yes.
Yeah. So through the chair, you look at that when you set the rates, because we tell you at the time this. Well, we should be telling you at the time this is what you've said is the affordability. If the rates are going to be higher than that, then we should be telling you that so that you know when you adopt the rates. And that's what you have done in the LTP. You've adopted rates when you include water that's higher than the 5% benchmark. Yeah, rates. So the total rates are higher than what we've said is reasonable for people to pay, but over the life of the LTP, it comes down. Does that make sense?
So significant growth, if we don't have it in our systems, actually shows up as a poor financial performance indicator. Just the way it's structured.
No, part of it, the affordability is because of the fact that the costs have gone up, and not, when we're doing the budget. So we tell you then what the rates are going to be, and they haven't been for the last few years around under the 4.8%. They've been higher than that.
And thank you. And just one last other question is on the derivatives made a revenue contribution of 2.7 million. Do we each year capitalise that interest rate against the current interest rate? Is that how?
At the end of each year,
Sorry.
At the end of each year, we revalue all the derivatives. So it's marking against the current market rate. And with one of the derivatives actually expiring in July, obviously that one drops off. Therefore, our overall liability that we've got sitting there has reduced. So we've shown a gain back.
It is when I think you've used, Bryce, the indicative number of 1.7 million has been at the point of significance. That being 2.74 million lifts it up into that bracket. That's not normally. That would indicate that the interest rates have risen since we've locked in some fixed funding.
Yeah. So that derivatives move around like up and down. As you expect. So if you've got a liability, what it really means is that you've locked in a higher interest rate. So you might have locked in 5 years ago, you might have locked in a 5% interest rate. And so you're happy to do that because at the time that was the right thing to do. And then today, if you can go down to Westpac and they'll give you 3%, then you'll go, well, actually, you're paying 5. You could be paying 3 if you went to the market. So in terms of what they call the mark to market, which is a revaluation, you've actually out of the money, right? Because if you went to someone today and said, I've got $1 million loan, it's at 5%, I said, take it off my hands, they'd go, mate, why do I do that? I can get $1 million at 3%. So you'd have to pay them to take it off your hands. So that liability moves around, and so it is a reflection, as you say, upon changes in interest rates, and it's also a reflection of the time, because some of those interest rates are going out 3 or 4 years. So you also have to look at what we call the price curve and what the banks think will happen. So while today it might be, in the example, 3%, the banks might be saying, well, we think in 3 years' time the interest rates might be 6%, say. So it's a function of the interest rates you see today, plus the bank's views of where the interest rates will be in the future, and that does mean that sometimes, even though you might have, it might look like an asset, if you've got a long-dated interest rate, set interest rate, you can get some funny differences. So to understand that number, you really have to look at the detail and understand the terms of your interest rates and what the banks are thinking. So it's not a simple, it makes sense to me, but it's a liability because at the end of the day, you've locked in, when you lock these things in a long time ago, interest rates are a lot higher, and obviously with the credit crunch and COVID, etc., rates have dropped.
I'll leave it before people's eyes glaze over.
Yeah, sorry, I realised after the 45th minute I'd lost you, but anyway, I didn't want to turn around.
Okay. Any other queries, questions from anyone? Okay, well, opening up with a statement, I think this report is actually a significant progression on quality and information flow that from last year. I think we're moving in the right direction. I think it is representing a period when the council has got a huge amount of work on stream, and to show that as best we can to the community of what we're doing should give some comment to some of the people in the community who perhaps have a jaundiced view of council's activities. So I think congratulations to everyone. It's very pleasing to see, apart from the one, there are possibly two graphs that were highlighted by Councillor Wills's comments about affordability. When we're looking at our debt benchmarks, a balanced budget, all the other benchmarks have got a pretty well consistently in the green. And we've bounced back in terms of the operations control benchmark. We're back into the green there as well from the last 2 years when we dipped below the criteria that we were being measured against. So it's been a significant improvement over last year, and I'm fully aware of the efforts that everyone's put in to achieve this result, and I think that's well done. So I'm certainly very much supporting this recommendation from this committee to full council that we recommend this for adoption at full council. So statement from me. Councillor Wilson Collins is a seconder.
Thank you, Mr. Chair. Just to concur with everything that you've said there, and yeah, I made the same observations. The report itself is looking really good, and except for those couple of tables, it's a good piece of work. So and there's all sorts of things that actually influence those figures in those tables anyway. It's not necessarily any reflection on the staff themselves. So thank you, Sue, and thank you, Graham. Just another beautiful report for us to go on the annual report. Thank you.
Thank you. Statements from others. Deputy Mayor.
Yes, thank you. Yeah, I just want to thank the staff and the auditors for their work on this annual report, and to compliment them on the presentation. It's looking good. And also I note that particularly those graphs at the end really show that we are creating some headroom for ourselves as a council, which, given the changing environment we're moving into, is actually that's a good place for us to be. We've got a little bit of headroom to be able to respond to some of the quite extensive changes that are coming our way. So yeah, I want to thank management for helping us to get into that space. Yeah, so I'm happy to recommend this to council.
Thank you. Councillor Wells, got your hand up.
I'm going to have to ask your leave, Mr. Chair, and you can say no. I actually did have a question which I didn't get in time, and I apologise.
That's all right.
It's up to you whether you allow me.
I'm happy to allow you to have that question, even though we've run out of question time.
Thank you, Chair. I appreciate it. For Bryce, is that what I call you by your first name? To the auditor, the essential services benchmark, it shows our expenditure relative to depreciation, and it shows that as the baseline or the benchmark. My question is that 100% depreciation, or the depreciation rates that we set as a council?
The 100% depreciation, so straight from your financials.
Yeah, but we don't put in. We've traditionally not always put in 100% depreciation of our assets as being what we put into our plans. If somebody could please.
Yeah. So through the chair, so what happens is that these benchmarks are set by central government. So they haven't taken any consideration of the fact that we don't fund our depreciation wholly, and we won't be doing so till about 2026. They just are looking at whether we're spending over our depreciation. This is how it's measured. So we are spending a lot. We've got a lot of capital expenditure because we're growing, and there's a lot of renewals that we haven't done in the past. So we meet the benchmark. So it's as simple as that.
Okay, and that was this the part A. Thank you for that. It's just it helps me understand because it just says depreciation, not actually a rate of depreciation.
Yeah.
And the other quick question I had is, it was mentioned before by the auditor that that there's a certain capitalizing of the resource income as opposed to when it's initial, and it's apportioned out based on when it's expected to actually flow in. Is the same process applied to capitalizing our expenditure when we go into providing infrastructure for a subdivision that hasn't taken place yet? Or do we apply all of that funding against our costs at the time it takes place?
So through the chair, I think what Bryce was talking about was the fact we don't recognise, it's the recognition of income at balance date. And historically, we have recognised, we've invoiced out, and there may be some, especially when we invoice out in instalments, and we may not have completed the work to actually have earned that to put it in our accounts. So over the last 2 years, we've been getting better at it, and at year end, we make an adjustment which takes that income from this year that we will have put in this year, because it's, as we invoice for our instalments, and we've recognised the fact that actually some of the income relates to the work we'll be doing in 21-22, and we just do a financial adjustment. I think that's what Bryce we were talking about, Bryce, is that correct?
Yeah, that's right. Yeah, so the income part is just, you recognize 100 and you just proportion when you recognize the revenue across time. But with the expenses part, a lot of them are actually employee costs. It forms part of your payroll. So it just, whenever you pay whenever your employees work, you expense it.
So there's no capitalization out of our actual expenditure. It's taken as it comes in, as a bill.
Right. So through the chair, so our employees go straight to the employee benefit line. Apart from in this year, I think there might have been about 2 employees who worked on capital projects last year, where that was charged to the projects themselves rather than employee benefits. But this year, my understanding is we have quite a large number of staff who are working on the projects, because there's a huge amount of projects as project managers that we're employing rather than contracting, and their salaries where they are working on projects will be coded to those individual projects.
Yeah, that's right. That'd be right. That'd be normal. Yeah.
Thank you for the answers, and I apologise for holding the meeting up.
No, that's all right. Thank you. Right. Other statements from anyone else before I put it to vote? All right. Thank you. No closing statement from me. I think everything's been said. So looking at the motion is to recommend to Council the adoption of the 2021 annual report, Part 2 financials. All those in favour?
Aye.
Thank you. Carried. Right, that brings to the end of our agenda. So I will go to a closing karakia. Tēnā tātou, ni rā kai mahi ki a koutou. Mia koutou, whakakaro rangatira, ai haere pai mai. Mi hoki pai atu no rira. Tēnā koutou, tēnā koutou, tēnā koutou katoa. So thank you very much, everyone, for your attendance and contributions to this extraordinary meeting. The recommendation has now been put forward to Council for our next Council meeting. And so I formally close the meeting at 11:15, and have a good day for the rest of the day. Thank you very much.
Thank you.